Hi guys, a very good evening to all of y'all. My name is Abdul Deshad, and today I have planned to focus on doing a consolidated cash flow from your September December 2023. And the question that we would focus today on is called Kabelo Co. So this could be found in your BBP and Kaplan, right? So let us directly move on to today's question, what we are going to do. So this would be your background, right? This question, let me give a background as well. So this question majorly focuses on statement of cash flows, right? A statement of cash flows as well as some of the standards that are applicable. So this is being tested for 30 marks, right? This will be tested for 30 marks. And this question is a very sure short question in terms of the examiner, right? So 100% the students can expect this. It could either be consolidation from different parts, right? So it could be your statement of cash flows as what we're going to deal now. It could be from your P&L. It could be from a balance sheet, right? So this is a sure shot question. The more you practice, the more you'll be able to clear it off, right? And we have multiple questions that has been given in BPP as well as Kaplan and Study Hub. If you all have time, right, try to practice this as much as possible, right? Per day, about 3 to 4 hours would be ideal. For the people who are working, you all could split your time accordingly. And for the people who are doing full-time studies, yes, the more effort that you all are planning on putting on, you all could ace your SBR subject. Yeah. So, uh, let me share you my screen as well. So before I start off the question, I wanted to give you all some tips on, before attempting the question as well. So give me a minute. Yeah, here it is. So the key tips that you all should know, right? So as I told you, normally you all will be tested with 4 questions, right? 4 questions equivalent to 100 marks. Okay. So 100 marks is your total marks for that is allocated for SBR, right? So if you all need to pass, you'll just simply merely need about only 50 marks, right? So always the very first thing that my lecturers taught me is do not try to be a perfectionist. That is why I've mentioned it here. Do not try to be a perfectionist, right? There is no one till date who has scored 100 out of 100 for SBR because it's not practical. I know there are multiple people who try for prizes. Yes, they are the exceptional people, or people who they are the hardworking people who put much more effort, right? But we do not right. We do not need to compare ourselves with them. What we want is make sure that we get the 50 mark and move on because we have another more 3 subjects to clear and get the ACCA affiliate, right? So our final long-term goal would be to get the ACCA affiliate regardless of whether you are a prize winner, a world ranker, that doesn't matter at all, right? So do not be a perfectionist. That is rule number one, right? Rule number two, majority of us have a problem with time management, right? Despite us we have done multiple degrees, we have passed off skills and we are doing our P levels. All of us have this, adaptability problem in terms of time management. So examiner itself personally has recommended us, see, the total marks allocated for SBR is 100 marks, right? And the time duration would be 3 hours and 15 minutes, right? 15 minutes, just keep it as your spare reading time or whatever of that sort. But 3 hours or equivalent to 180 minutes has been allocated by the examiner. So therefore, what examiner recommends us is to use 1.8 marks per minute has to be allocated, right? So we need to allocate 1.8 marks per minute. That is what he has recommended. Now, moving on to consolidation. When we look at consolidation, as I told you, there is a sure shot 30 marks guaranteed question that examiner is going to test you, right? So if it's a 30 mark question, right, and the examiner wants you to spend 1.8 per mark, you will need to spend approximately 54 minutes. This is a recommended approach by the examiner for your consolidation. But I know that this comes through practice, right? There are some people who allocate 1 hour for consolidation. So the minimum I would say is try to make it to maximum of 54 minutes. And if you're not possible to make it, try to spend a maximum amount of 1 hour in your real exams, right? Don't try to overdo it, because the more y'all overdo it, y'all are going to lose out time for the other three questions, right? And the second approach, the second tip that I would like to give you all is, make sure that you all try to do all the questions, right? Do not leave any questions or do not leave any stones unturned, right? Because by doing all the questions, you all are able to, I'm pretty much sure that you will all be able to pass it all and or get your 50 marks that is needed or anything above that. So do try to do all the questions, right? Do not leave this at all. Try to attempt as much as possible, right? Suppose you get stuck in a particular question, move on, because none of these questions are interconnected. Once you move into the question, I will show you how it is. None of these questions are interconnected, right? So if you all are stuck in a particular part, it's okay, no problem. You all might be, all of us get stuck at a point, but the strategy that you all need to use is, make sure that you all leave that particular question for a while and move on to the other. Because I'm 100% sure that you all could attempt the other one. That might be easy for you all. So do try to do all the questions that has been provided by the examiner, right? And number two, I mean, this would be the third advice that I would like to give you all. So this is number three, right? What I would say is, most of us have the habit of practicing. Some of us, we read the answers, the examiner's answers. We do not go and write, right? There are some people who practice on Excel. To be honest, I was a person who practiced on Excel because I had this adaptation problem of moving the slides here and there. But the recommended approach by both the examiner and myself, since I have learned through my mistakes, is that try to get yourselves adapted to the ACCA practice platform, right? I mean, now all of y'all are from P level, some might be from exemptions, but you all would, as of now, you all might be knowing what is where you all can find off the ACCA practice platform. And if it is needed, like where you all need to find, I will definitely upload a short on that. If you all need, just drop it on a comment section on what kind of help or advice or any approaches that you all need. Drop it on the comment section, and I might be able to assist you all. So try maximum to practice all the questions on the ACCA practice platform. The reason is, I'm telling you through experience, that is, we are given multiple slides, guys. Okay. For to do one particular question, we are given multiple slides. I'm not making you scared. I'm not intimidating you, not at all. I'm just telling the reality. I'm trying to bring you all the real aspect that you all need to know, right? So you all need to adapt to that, how to manage those slides, how to move between one tab to the other, so that during the real time exam that you all will not be having any adaptation or any practical problems, right? So try to practice as much as possible in the practice platform. For today, I will be doing it on the Excel, right? Going forward, I will shift my approach onto the ACCA practice platform, so that you all also will be starting to do it according to that, right? And the last but not least is, practice is the key to pass this exam, right? Because you all see, SBR. SBR is a continuation of foundation accounting, the financial reporting, and this SBR is the last benchmark of your ACCA career in terms of financial reporting, right? So, they will be, examiner might be hitting you all with all the standards, all the shots that he got, right? He might be putting your bouncers, full toss, any of that sort. So make sure that you know, you are, I would say, you are quite familiar. I mean, you're confident with your standards, right? Do not try to leave any of the standards unattempted, right? do read all the standards. All the standards will be tested. It can be a minor standard as well as it can be a major standards. No problem at all. But what I would suggest you all is try to read all the standards and try to practice. Try to make some short notes or try to read some articles or whatever that sort that y'all could find. Right. So that would be that. And the other one is, guys, normally that since skills, most of your lecturers would have told you all to read technical articles. I know in the skills level, majority of us, about 80 to 90% of us, this, even though our lecturers recommended them, we would have not attempted or made an attempt or an effort to read technical articles. But technical articles may it has a pivotal role in SBR, right? Because you all need to know how real businesses, how the actual businesses perform. Because now, since we are doing SBR, we are supposed to consider ourselves as, financial experts. We are not the junior accountants who are going to create accounts. No, not at all. We are not the people who are going to create balance sheets. No, balance sheets, P&L, statement of cash flows, these are not our duty. These are the junior accountants. Junior accountants in the sense people who have, part qualified, who have done FR, financial reporting, F7. We are the people, we should consider ourselves as we are the finance controller or we are the CFO or we are the chairman of the company, right? Who has a financial background, who has a holistic background of financials. We should try to, identify those errors, the small errors that are made by our junior accountants, the accountants. We should try to find out the mistakes, omissions, all those sort, and we should provide the shareholders or the investors with an accurate and reliable financial statement, right? That is our sole duty. Any mistakes that is done by the junior accountants, we are held accountable. So always when you all are attempting any kind of question in SBR, think, try to put yourselves into the shoes of y'all are, industrial experts. Y'all are finance controllers. Y'all are the CFOs. And y'all are going to advise the shareholders. Y'all are going to advise your employees. Y'all are going to advise your juniors. This With this approach, y'all will be definitely able to pass. Right? So do read the technical articles. Right? Let me bold this because this would help your pass as well. Right? And the final one, the final key tip that I would like to give you all, and after we could move on to the question, is that read the requirement and then do the question. Most of us have different alternative approaches of attempting a question, right? Some people, for example, let me take this question as a sample format. Some people, what they would do is they will start reading the question from the header to the latter part. Well, this approach, I would say this approach is not recommended, right? It's not recommended by the examiner as well as by the people who have done SBR, who have passed SBR. They would not recommend this approach. The ideal and the best approach to attempt a question is you all need to, guys, go and read out the requirement first. Can you see here? I have highlighted in blue. Always read the requirement first, right? And after that, go and read the question or the paragraph that has been given. Then you all will be knowing that on which part or on which segment that you all need to attempt this question and answer. For example, can you all see here? The examiner has clearly told me use exhibit 1 for question number 1 and question number 2 of A part. So does it mean that I need to go and check into exhibit number 2? No, not at all. Examiner has clearly been give us a restriction saying that these two questions can be attempted by only referring to exhibit 1. Therefore, all of us should make sure that we only attempt this 14-mark question and the 10-mark question from exhibit 1 only. There is no necessity for you all to go and read exhibit 2. Moving on, question B, they only say that we need to refer to exhibit 2 to do and grab this 6 marks question. Yeah. So this is how you need to attempt that question. So Here it is. Read the requirement and then do the question. None of these exhibits are interconnected. Can you all see here? None of these exhibits are interconnected in the sense is, let me show that as well. See, this is exhibit number 2. This is separate different topic, right? This topic will not be connected to this one, right? It will not be connected to the first exhibit, right? It is not connected at all. So you all don't need to complete exhibit number 1 in order to do exhibit number 2. No, not at all. Examiner has purposely broken it so that, suppose in case if you all get stuck with your exhibit number 1, if you all are finding it difficult to complete that question, no problem. You all can do the question number 2. They are not interconnected. They are not dependent on one another. Yeah. So that is the basic key tips that I wanted to give you all. Don't worry, I will be uploading this Excel. I mean, for the people who need, right? I will be uploading this Excel on the YouTube as well. And if you all have any further doubts in terms of standards, accounting practices, any questions that you all need to do, or if you all have any questions on this particular question that I'm going to discuss today, drop it on. Feel free to drop it on the comment section, right? And I will try to respond as soon as possible. See, we all are here to learn, right? No problem. It can be a normal question, it can be a complex question, it can be a simple question. Not at all. It is up to us to make sure that we grab all the knowledge that is required to pass SBR. Yeah. So always have this positive mindset and practice a lot. Keep yourselves calm, keep yourselves hydrated. I'm pretty much sure that you all will be able to pass SBR in the very first attempt. Yeah. So if so, let us start off with our very first own question. So as I told, I will be using the examiner's approach of reading out what is the requirement that he needs us to do. So the very first question is, he is asking for a 14 marks. Well, 14 marks is quite a lot. If so, what is he trying to test us with? What is he trying to test us with? Let me erase all this so that you all will be having a fresh aspect of what we are trying to do. Right? And let me use a color that I would like. It would be blue. Yeah, I would use the blue pen. Okay. So another point that I wanted to give you all, it's a last point, right? I know I'm giving you all so much of key tips on your very first day, and most of you all might be bored. So if you all are bored, don't worry. There is an option given by YouTube, right? Of you all can fast forward the recording, and you all can watch it. So whatever that is relevant to you all, try to grab it. Whatever that is needed, you all can take it, and whatever that is not needed from this video, you all can clearly remove it off. Yeah. So always we need to identify the verb. Verb in a sense, in this particular question, the examiner wants us to adjust, right? Sometimes there are multiple verbs that have been given by the examiner. It could be adjust, it could be explain, it could be calculate, and it could be, you know, it could be what would I say? Adjust, explain, calculate, and sometimes he might tell you all to advise. I told you, all of us in SBR we play an advisory role, right? So he might tell us to advise. So he can test you all with different sort of verbs, right? In this question, the examiner wants us to adjust, right? Okay, he wants us to adjust. Okay, what does he want us to adjust? He wants us to adjust of a pre-populated sheet to prepare revised extracts for the operating and investment activities of what? Of consolidated cash flows, right? And this is of Kabelo Co group. I guess so. Kabelo might be the parent, right? We will read it and we will be able to identify it. And the year end would be 31st December 2015. Okay. So let me put it in a simple way of we all could understand. So the examiner wants us to adjust, right? Why does he want to adjust is, I told you all these statement of cash flow, statement of P&L, statement of what you call statement of SOFP. All these are provided by prepared or provided by these junior accountants or accountants who are part qualified, right? Or who has not even completed their very own degrees, academic degrees or any of that sort. So there is a high tendency that they don't know the accounting standards, or they are incompetent, right? They make much mistakes. So you as a finance director, you as a finance controller, you need to go and review that, and you have to adjust it by providing them revised extracts. Why we provide revised extracts is, guys, because as I told you in the initial part of this lecture, we need to provide our shareholders with truth and accurate information, faithful and relevant information, so that shareholders are able to make proper decisions, proper investment decisions. Okay. And so what they want us to do? They want us only to adjust operating and investing. All right. As most of you all know, you all would have done in F7, right? In F7 that you all know, cash flows, according to IAS 7, cash flows will only contain operating, investing, and financing activity. But here, the requirement is only to go and adjust the operating and investing activities. This means that we do not need to create any figures related to financing activities. Yeah, hopefully that's understood. Only try to do what the examiner is asking from you all. Don't try to overdo it. Yeah. If he only asks for you all to adjust the operating activities and investing activities, only focus on that. Merely focus on that. Right? By focusing on that, you all will be able to save time, and you all will be able to complete these 14 marks. Yeah. Okay. So this is what his requirement is of. Right? Don't worry, I'm not going to read the other requirement unless I'm going to attempt it. So once I complete this question, I will go and read this as well. Yeah. Okay. Okay. This is the background. Normally, an examiner gives you all a background, like a brief summary of what is going to ask. Yeah. So Kabelo Co is the parent company, right? Kabelo Co is a parent company. Parent company means, y'all own more than 51% of the ownership, or y'all are able to influence control, right? I guess y'all might be done with your syllabus by now, or some might be starting your syllabuses, no problem. There is a part called IFRS 10, right? About control. Make sure that you're going to read it. IFRS 10, right? This is all about control, as well as, if y'all are free and if y'all have a pen or paper, or people might be using iPads, iPads, or your laptops, any of those sort, just try to jot down some points what I'm giving. Try to read IFRS 3 business combinations, right? All these are relevant. All these are relevant for now. Okay. So, okay, as we know, a parent company is a person, where you have significant control over the investment decisions as well as the operating or financing decisions. And you all might be having 51% of ownership, right? So y'all are considered as a parent if you all fulfill those criteria, and there are way more criteria that needs to be fulfilled. You all can refer to your textbook, right? And always a very important point: always try to identify the financial year end. In this question, the financial year end is 31st December 2005. If so, if so, if so, if 31st December 2005 is your financial year end, your financial year beginning would be 1st Jan 2005, right? We are preparing our accounts for 12 months. See, always you're supposed to identify your first requirement, or the first method of attempting your question is identifying the financial year end, right? Or the financial period. By doing that, your question is all sorted, right? By doing that, you all are putting the brick of the foundation, right? So this, I know it looks a bit ugly. So let me, remove off all this that is not needed. It's not needed. Let me remove it off. Okay. Let me remove it off. Here it is. I know my graphs might be looking ugly. They are not presentable because I'm having a small technical glitch in my laptop in terms of my notepad. Don't worry, I'll get it sorted by naming its video. So let us go back to the question. The financial year end is 31st December 2005 and the financial year beginning is 1st Jan 2005, right? And after that, here it is. Here it is. Sorry, I did the same question to a different set of group of people. So that is why all these are colored. I forgot yesterday to, remove this. I forgot to reset it. I'm extremely sorry on that regard. But let me attempt with you all. Since you all are a new batch, let me attempt with you all it freshly, right? So, okay. This is a question. Kabelo Co has acquired 80%. Yeah, 80% indicates significant control. That means you're the parent. Kabelo Co is a parent, right? Kabelo Co is a parent. Kabelo Co is a parent. I mean, jot this down, guys. Jot it down in wherever you all could so that it makes you all easy. Just K is for parent, right? He's acquiring Trudeau's. So obviously Trudeau's has to be a subsidiary. Since it's 80%, he's a subsidiary. If it's less than 50%, obviously you all can treat him as associates. And anything less than 20%, it's just simple investments. Simple investments in the sense you all can treat them as IFRS 9, according to IFRS 9. So that and all I'll be studying, those are not needed at now. So here it is, Trudeau's. He's acquiring Trudeau's, right? So Trudeau's is your subsidiary. Trudeau's is your subsidiary. T stands for sub. Yeah. Okay. Okay. Let me read on the question. He has acquired 80% of 100,000 equity shares of Trudeau Co. Right? 80% of 100,000 equity shares means what they are trying to indicate is you are purchasing how many shares? 80% of 100,000 shares is equivalent to you are buying 80,000 shares from Trudeau, right? Trudeau has about 100,000 shares. Out of that, you're buying 80,000 shares. If so, what will happen to the remaining 20% or 20,000 shares? Well, that is owned by NCI. You all know, you all have done financial reporting. You all know what is NCI, what is parent. So if 80% is bought, 80,000 is acquired by Cabello, obviously the remaining this one would be towards NCI. 20% into 100,000. That would give you 20,000 shares. Right? 20,000 shares is owned by the NCI. NCI means non-controlling. You are not able to, control them. They are beyond your control. They are independent people. They don't listen to you. Right? Simple. Make it simple. They are like your sister, right? A brother and a sister relationship. You're the brother. You have a higher authority, and your sister never listens to you. Okay. The sister who doesn't listen is called as NCI. Right? The sister who doesn't listen is called as NCI. Yeah. Okay. Okay. Yeah. So we're done with that. And when they have they acquired in the year end or year beginning or in the middle of the year? 30th June indicates that they are buying it in the middle of the year. Here it is. So ideally, the all the accounts needs to be prepared for a mid-year. Mid-year means we will not pay for 12 months. We will not consolidate for 12 months. We would consolidate for from 30th June to 31st December 2005. That is July, August, September, October, November, December. That is, we need to consolidate our SOFPs, PNLs, balance sheet, cash flows, all these two for 6 months. Consolidate for 6 months. That is why I told you all draw this time frame. So, I mean, you all don't need to draw, right? Since you all have done FR, you all have that understanding. You all don't need to draw, but this is just for explanatory purposes only. Yeah. So you all need to consolidate this for 6 months. Okay. Moving on again. The consideration. Obviously, you're not no one's going to give their shares for free, right? You all are planning on buying 80% of shares, they're not going to give for free. You all need to pay something in exchange, right? What you all are going to pay is, in this question, you all are paying cash, right? Which is $5 per share, as well as an issue of one Kabelo Co equity share for every 4 shares acquired in Trudeau's Co. So how you all are planning on making this payment? You all have got 80,000 shares. How are you going to pay? How to pay? Well, there are two methods. According to this question, there are two methods. Number one is you're paying through cash, right? And the number two is you're paying through share exchange. Yeah. Cash means obviously you're getting 180,000 shares, you're giving him cash, real time cash, physical cash to them. Share exchange means, for example, you're buying from him 80,000 shares and you all are giving shares of your own company, right? It's like tit for tat. I give you X number of amount of shares and you give me Y number of shares. So, there's a two-party relationship. So that is share exchange. Yeah. So on what terms? The Kabelo Co is going to give one equity share for every 4 shares acquired. For every 4 shares acquired, right? For every 4 shares acquired. So what does this indicate? So Kabelo Co is planning on giving 1 share from his company for every 4 shares he acquire in Trudeau. That means he is giving 1 share of his company for every 4 shares that he is buying from Trudeau. So it is 1:4, right? I'm going to give you one. I'm going to give you one for every 4 shares that I'm going to buy. Yeah. So this is what he's planning on doing. Okay. After that, Kabelo Co's policy is to value non-controlling interest at fair value at the date of acquisition. Okay. Normally, if you all have gone through all the standards, this should ring a bell. This should ring a bell. This should ring a bell, right? This should ring a bell. As per IFRS 3 business combinations, whenever you all are combining a business, whenever you all are acquiring a business, you all need to value all those, the NCIs, the cash considerations, or any of the considerations, acquiring fair value of net assets, all those needs to be at fair value, right? When you are buying, at the date of buying, you all need to make sure that all these are in your fair value, right? If you all study IFRS 3, you all will be knowing what I mean, right? It is there on your study text. Go and read that. That clearly indicates whenever you buy, right? Whenever you buy, value at fair value at the date of acquisition, right? This means acquisition means when you're buying it, when you're buying the subsidiary, that's the date of acquisition. From that date, all the assets, all the net assets of the subsidiary, all the cash payments that you are going to pay, all the share exchange, all the NCI that you are going to pay, all needs to be valued at fair value. Yeah, that needs to be done. So the fair value of the fair value of Kabelo Co, right, the parent company, and the fair value of Trudeau's Co as at 30th June. This is the date which we bought. This is the date which we bought the company, were $13 and $8 respectively. What does this mean? I told you, right, that we need to revalue them to their fair value. So at the date of 30th June, the fair values for the shares were 13 rupees and 8 rupees. Sorry, I'm using rupees terms because I'm from Sri Lanka. In Sri Lanka, India, we use rupees, but y'all could use your respective currencies as well. So in this particular scenario, they're using $13 as well as $8. So we are done with the very first one para. What does our examiner wants us to do? Right? What does our examiners want us to do? Whenever you see a question like this, I would say he's trying to test you all with goodwill. The reason I'm saying is because obviously I've done this question, number one. And number two, this has all the aspects for the goodwill. It has the fair value of NCI, it has the cash consideration, it has the share exchange, which is used to find the total consideration, right? So when I look at this question, my brain, it automatically processes, yes, I need to calculate goodwill, right? I need to calculate goodwill. Okay. So let us go and calculate goodwill. Let us go and calculate goodwill. Let me remove all these figures since I'm going to do it fresh for y'all. Let me remove all these figures for y'all. Yeah. Let me remove all these figures for y'all. Okay. But let the format be because, I don't want to waste your time. Let the format be. So 80% of the this one that y'all are acquiring, y'all are paying cash. How much cash y'all are going to pay? Y'all are buying 80,000 shares, right? How much are you going to spend for? Here it is. 80,000 shares you're going to buy at $5 per share, right? That's the cash payment that you're paying. $5 per share. So you're going to pay 400,000 shares. $400,000 for 80% of shares, right? 400,000 of dollars you're going to pay for 80% of shares that you have acquired. As well as I told you all there is another one, share exchange, right? You're going to give one share of Kabelo Co for 4 shares of Trudeau that you all bought. Simply, I'm gonna give one share for $4 that I have bought from Trudeau Co. So you all need to find out how many shares that you all need to give in terms of Kabelo Co. Right? You all need to find out how many shares that you all are going to give in terms of Kabelo Co. So what you all do is just simple cross multiplication. From Trudeau's Co, you all are buying 80,000 worth of shares. Okay, let me put that also in a detailed explanation. 100,000 shares of Trudeau's Co. Out of that, you all are buying 80%, which means you all are buying 80,000 shares. You buy 80,000 shares. Okay, now you are going to give him back. If I'm going to give him back, how many shares am I going to give him? How many shares am I going to give him? How many shares am I going to give him? See, I'm going to give him one share for 4 shares that I buy. So that means ideally 80,000 into 1 divided by 4. I'm going to give him 20,000 shares of my Kabelo Co, right? I mean, this is quite simple, right? You all don't need to do cross multiplication, nothing. Just simply divide 80,000 by 4. You all will get 20,000 number of shares, right? These are the shares that you are going to give him. Okay, fine. You all are giving 20,000 shares at the date of acquisition, right? At the date of acquisition, you are going to give Kabelo Co shares, right? How much is the shares? Can you all see here? At the date of acquisition, Kabelo Co's share, the number one, is at $13 per share. So y'all are going to give $13 for 20,000 of your own shares at $260,000, right? Y'all are going to pay them $260,000 for 80% of the shares that y'all are going to buy, right? Obviously, this is going to dilute your shares. I mean, this is going to increase your share capital because you're issuing some more shares, you're raising shares, but this might dilute your control in your company, right? That's not needed for all. No need to be done. After that, can you all remember that I indicated there was a part, your sister, who you can't control at all? Yeah, your sister owns 20,000 shares in that company. She owns it at how much? NCI, here it is. NCI at fair value at the date of acquisition is $8. Here it is. The fair value of Trudeau's Co is $8. So that means your sister is buying out of Trudeau's Co 20%, right? And these 20% I cannot control at all because it is owned by my lousy sister who doesn't listen to me, right? She doesn't listen to me at all. So that is she's buying 20,000 shares at $8 per share. So that means this is all the total consideration that you're going to pay in terms of that, in terms of acquiring Trudeau's Co. Right. So we are done off with this. We are done off with this. This part is completed here. Right. Not needed at all. I mean, most of the FR students, y'all itself can do this part. Y'all can complete this. Y'all don't need my assistance. Y'all don't need any of the lecturer's assistance. Be confident that y'all are able to do. The paragraph might be lengthy. The paragraph might be, having complex terms. The paragraph might be, sometimes complex. But y'all keep your confidence within yourselves. Y'all are able to attempt it. Right? Don't worry. Examiner gives us with large paragraphs. But when y'all start reading it, those are just basics. Right? Okay, moving on. Further, let's move on. The carrying amount of the net assets at the reporting date, that means at the date of acquisition, okay, at the date of acquisition. See, now when you all are buying a company, right? When you all are buying a company, you all don't only buy shares, right? You all buy all sorts of assets as well as all sorts of liabilities within a company, right? It can be PPE, inventory, trade receivables, brand names, any of those sort, you all will be buying, as well as you already don't buy assets. I told you all as well as you all buy the liabilities also. So you will see in these major companies such as KPMG, EY, PwC, all these companies, they have something called mergers and acquisitions. When they buy, they do this consultation for a certain amount of price. When some of these companies want to acquire another company, right? So all those people who are working at KPMG's, EY, all those reputed big fours, they are good bargainers. Bargainers in the sense they will buy, they will pay less amount of price to grab in all the assets that you all have. Right here it is. That is why I mentioned. Here it is. They will make sure that you all get 100% of the assets, as well as they will try to ensure that you all only get about 5%, 6% of the liabilities. See, in logical terms, right? Why would I buy, if I'm going to buy a company, I only need to get inflows, right? I don't need to pay outflows. I mean, if that company was on a loss, why do I need to pay for losses that that company had? Ideally, that company is supposed to be paying for its very own loss. So always the bargainers, or always those investment bankers, finance related personals, they would definitely try to take, they don't want to take other people. That means they don't want to take Trudeau's Co's liabilities into their very own pocket and pay. No, I'm not running a welfare organization here. I need to make profits. I need to make sustainable profits, right? So I'm not running a welfare organization. So what I would try to do is I would always, when I'm acquiring a company, it's quite simple. I'm going to get 100% of assets, and I'm going to keep my liabilities at zero level as much as possible, right? So that is what they do. Okay, here's it. Okay. The carrying amount of net assets reported by Trudeau Co. on the date of acquisition is as follows. All this sum ups to 747,600, right? Okay. You all know the goodwill calculation how, right? It is a difference between total consideration as well as the net assets of the subsidiary at the date of acquisition. The difference between them will give you goodwill. The difference between total consideration and the net asset is goodwill, right? Okay. So the carrying value as indicated of subsidiary of Trudeau's Co is 747,600. Simple, just copy paste. In exam, guys, that's why I told you all. In exam, you all can copy paste. There is an option you all can copy paste. You all can bold, highlight, underline. All those are available. So try to use them as much as possible. Now in this option, obviously, this I'm using on my OneDrive, so I don't think I will be able to, you know, copy and paste. So I end up typing it. But y'all can practice this, attempt this question on your uh practice platform. So it's quite convenient so that y'all could copy and paste. 747,600. 747,600. See what I'm doing. I'm just reading the question, and as soon as I read the question, I'm directly applying it. All right. I know since I have attempted this about this is my second batch attempting, so I guess I did it personally when I was doing exams. After that, I taught. another batch, and this is your second batch. So I'm attentive, so I'm able to do it. But when you all read, as you all do questions after questions, you all itself get an idea. So you all will be knowing that you all need to calculate goodwill. So as you all read itself, you all be on simultaneously, you all be working on your Excel sheets or ACCA practice platforms, right? So the carrying value is 747,600. Fine, no problem. Okay, moving on. This is done. Okay, okay. The only fair value adjustment on acquisition is related to PPE. Fine, okay. Break it. Okay. Always don't read a paragraph in a lengthy manner. Try to break it. Try to have some full stops, commas. Okay. Which had a fair value of 50,000 above its carrying amount. What does this mean? This means this question is indicating an upward adjustment, guys. It's indicating an upward adjustment. Upward adjustment means, let me give you all a small example. A very small example. I know sometimes here and there I might deviate a lot, but since it's your very first class with y'all, batch two, right? I need to give you all a detailed explanation. I need to give you all a detailed explanation. So let me do it. See, you all know Mars chocolate, right? Does anyone know Mars, Snickers? All those are from the same company, right? Mars, Snickers, all of those are from the same companies. They look like this. It got some peanuts and stuff. I mean, I know it doesn't look neat, but it's fine. Okay. So I'm going to give you all an example. In the market, in a supermarket, right? In a supermarket, Mars is sold at $10. That means the market value, the general market value is $10, right? But your stupid company is selling that at $5, right? What does it mean? That you are selling relatively low, or you are selling relatively less than the market value. So, you all are planning on incurring losses when you can sell the same Mars product, the same Mars product. You all also selling the same Mars product, right? The same Mars product at 5 rupees. This is not reasonable, guys. This is not it's not valid. If I need to have sustainable profits, if I need to have long-term profits, I need to sell at market value, right? Then only I can have a competitive edge, right? So when the market is being sold at 10 rupees, you're selling at 5 rupees at a loss. This is not acceptable. When this happens, right? Always what you all need to do is you all need to do an upward adjustment. Whenever upward adjustment is done is, let me write it here, upward adjustment, right? Upward adjustment is done is when your fair value is greater than carrying value of the company. Simple, right? Simple, right? Simple. Whenever if Mars is sold at 10 rupees in other supermarkets, why do you want to go and sell your own Mars chocolate for 5 rupees? You're going to have a loss. Don't do it. If y'all are doing it, y'all are not finance professionals. Y'all are some different kind of people, right? So there is an upward adjustment of how much? $50,000, right? When I'm having an upward adjustment, $50,000, I will go and include it into my net assets of subsidiary. If you all need the double entry, yes, that also can be provided. That also can be provided. Don't worry, these double entries are not needed, but I'm a person who works with double entries. Like my entire life has been revolving around double entries. So I don't understand these numbers. I only understand merely double entries. It would be, if it's an upward adjustment, right? Upward adjustment, upward adjustment, debit. What is increasing, guys? Can you all see? Your PP is increasing. Your PPE is increasing. Debit PPE and credit goodwill, right? How much? 50,000. Y'all are increasing your PP by 50,000 due to this acquisition. Well done. And y'all are reducing your goodwill. Why am I crediting goodwill? Well, see, y'all might be knowing through your foundations or FR, y'all might be knowing whenever your net assets increase, right? Whenever your net assets increase, your goodwill will reduce. There is a negative relationship between goodwill and net assets of subsidiary. Okay. So negative relationship between goodwill and net asset of sub. Always, guys, again, I'm repeating myself, right? I'm doing it very slow so that all of y'all understand, right? There might be smart students in the class, there might be average students, there might be below average, no problem. So, y'all see, whenever your net assets increase, right? Whenever this person increases, right? Whenever he increases, this person will reduce. This fellow will fall down. You all try doing. You all try doing different questions. You all be seeing. Whenever I increase this fellow will reduce. That's the basic concept. All right. So I've given you all double entry. Okay. And as well as in your SOFPs, your PP, which is valued at carrying value, that also you all will be going and increasing $50,000. Right. In this question, they have not told us to adjust the SOFPs. So we don't need to do. Only we need to adjust the goodwill. Okay. So we are done till here. We are done till here. Okay. The group pays tax at 30%. Okay. Obviously, any listed companies, you all will be having to pay taxes. Yeah, fine. And the deferred tax was correctly accounted within SOFP. That means, yeah, they have gone and done perfect treatment, 100% accounting in terms of deferred tax. Right? We don't need to go and do any adjustment. No need to do at all. Our junior accountants have done it correctly. Okay. Let's read on. The taxation figure in the statement of P&L. We all know that the corresponding entries in P&L, right? Tax expense account debit, credit, tax liability, right? That's the double entry. Tax expense account debit, credit. Uh, yeah, no, give me a minute. It has to be tax. Sorry, tax expense account debit, cash, credit. Yeah, because you're paying through cash, right? You're paying through cash. Or it can be accruals. You can keep it in accrual basis. So, in regardless of that, you all are paying in PNL. You all are recording 385,600, right? Now here comes the twist. Here comes the first adjustment, and this figure has been included as taxation paid within the draft statement of financial cash flows. Why I'm telling this is a argument, or this is an adjustment that we need to do is, you all know as per IAS 7, right? You all know as per IAS 7, always the cash paid. Let me do it here. Always the cash paid is not equal to is not equal to the expense, to P&L expense. I mean, majority of the companies, 99% of the companies, always the cash paid is totally different to the P&L expense, right? So what these fellows are junior accountants, even though they have done the deferred tax calculation properly, they have gone and made a small presentation here, guys. They have gone and included this P&L figure This P&L number, they have gone and included as taxation paid. I repeat, always cash paid is not equal to the expense that is recorded, right? So we need to go and remove it. We will need to go and remove it. Why? Because this is a wrong figure. I need to go and remove or adjust it. Okay, fine. Let me go and adjust it. Let me go and adjust it. Can you see here? This is the draft, guys. This will be, I mean, normally, since this is a printed or a PDF form, it's given in on a piece of paper, but you all be given in Excel sheets, right? So this is a draft, and you all can go and adjust it. It's a draft statement of cash flows of Kabelo Co group, right? Okay. So let me go and adjust it. Here it is. Can you see here? This taxation paid is a tax expense, guys. That means it's a P&L balance. They have gone and included just the P&L balance, which is totally wrong. This amount is not the final cash amount. This is not the amount that I'm going to pay for my cash. No. So what I need to do is, if they have gone and minus this off, I need to go and remove it. They have gone and minus this off. I need to go and remove it. So let me go and remove it. Let me go and remove it. Why have I done it? Okay, I forgot. Please. Okay. I just simply copy pasted, guys. I just simply copy pasted the same question because I don't have the liberty, I don't have the freedom of accessing the practice platform right now. It's a bit stuck. So I just copied it into my Excel. Can you see here this taxation paid? This taxation paid is the P&L balance that they have gone and put. So what I need to do is I need to go and cancel it off. If I need to cancel, can you see this is a minus? If I need to cancel or if I need to remove, I have to plus back 3,85600. If I plus it back, the impact is now zero, right? The impact is now zero. So then you all might be having another question. If so, yeah, I mean, when are we going to record the actual cash amount that is being paid? Well, wait, we are coming to it. Wait, we'll definitely come there. I'm just going on with the flow, guys. I'm reading the question, after that I'm coming. So in here, they have made a mistake. Yeah, they have got, what's the mistake? They went and mentioned the P&L. What I did was, this is wrong. So I went and removed this off. I don't need it, right? It's wrong. I'm going to remove it off. Fine, I removed it. Okay. Moving back to the reading. Okay. Can you all see here this 30%? Can you all see here this 30% of deferred tax? Okay. This 30% of deferred tax, you all know, if you all have done FR, that whenever that you all get an upward adjustment, guys, whenever you all get an upward adjustment, you all need to pay tax for that, right? Always remember, always remember, right? Always remember, when upward adjustment simultaneously do a tax adjustment, right? Ignore my spellings, ignore my spelling mistakes, because we are not here. We are not here to learn English. No, our ultimate focus is to do financial numbers. So ignore my spellings. Whenever you all have an upward adjustment, now see here we had an upward adjustment in terms of PPE, right? When we had that upward adjustment, we need to calculate tax for it, right? We need to calculate tax for it. We need to calculate tax for it. So how much was the upward adjustment? My carrying value has increased by 50,000. My carrying value has increased by 50,000 means I need to charge 30% tax, which is $15,000 is my tax adjustment. Okay. Okay. Sorry. I need to charge 15,000 of tax adjustment. Now, people who have not done IAS 12, people who have not done IAS 12, which is related to income taxes, you all might be having a doubt. Why is he doing a tax adjustment? See, the standard says so. Okay. The standard says so. What does the standard say? Whenever you have an upward adjustment, always you need to do a tax adjustment as well for it. Because see, this upward adjustment is like some inflow, right? It is increasing your value of an asset. So whenever something increases, whenever you get a profit or whenever you get an advancement or enhancement in asset, you all need to charge tax for it. That is what we are doing here. Asset increased by 50,000. Okay, fine. So if I'm increasing my asset, I need to pay for the government 50,000, 15,000 of tax, which is 50,000 of upward adjustment at a rate of 30%, right? At a rate of 30%. If you all need and if you all need to connect it, if you all need to connect it to your standards, that also I can do it. That also I can do it. Hopefully, guys, you all are still with me, right? I hope this is not a boring lecture for you all, right? Feel free to, you know, ask any questions or whatever that you all have. Okay. Upward adjustment. Here it is. This is the principle, guys. This is the principle. This is the principle. Okay. What does the principle say? You all know that you all know temporary differences, right? Temporary differences mean the difference between your carrying value of asset and the tax base. See, tax base is calculated by taxation authorities, right? And the carrying value is calculated by your very own company. That means, for example, your Tata company, the carrying value is complied. So the carrying value is calculated by Tata company, right? Tax base is calculated by the taxation authorities of India, right? Now see here, when your carrying value is going to increase, guys, when your carrying value is going to increase by 50,000 due to the upward adjustment, your tax base will remain constant. Okay, your tax base will remain constant. That means this person is going to increase while this fellow is going to remain constant. If so, due to this, there will be a difference of 50,000. This 50,000 difference is called temporary difference in terms of taxation, right? This fellow is called temporary difference, right? Hopefully that you all have studied IAS 12. If you all have any doubts in this, just drop me on your comment section that if you all need to look into it. I will upload a video on that as well. A short would be fine because I don't believe in long videos. I'm not a person who studies long. So simply all need to understand is whenever there's an upward adjustment, that upward adjustment is going to increase your carrying value. Your tax base, which is calculated by the taxation authorities, are going to be remain zero. So the difference will be a temporary difference, right, of 50,000. And the taxation rate is 30%. That means 15,000 will be your tax adjustment, right? 15,000 will be your tax adjustment, right? 15,000 will be your tax adjustment. That is 50,000 into 30% will give you all 15,000 tax adjustment. Okay. If you all want the double entry, if you all want the double entry for tax adjustment, let me give that also. Okay. See, this 15,000, one day you all need to pay back to government, right? I mean, not government, sorry. One day you all need to pay it back to the taxation authorities, right? So you all will be going and crediting deferred tax liability. I'm going to keep it short, right? Okay. DTL acronym stands for deferred tax liability. One day I need to pay it to the government. So therefore it's deferred. So whatever is deferred or whatever you need to pay is an obligation. Therefore it's a liability, right? So it's DTL credit. What am I going to debit? What am I going to debit? I will debit goodwill. The reason why I'm debiting goodwill is the reason why am I debiting goodwill is wait, let me link that also so that you all know what you all are looking into. Okay. The reason, sorry. Okay. The reason, 1 minute. Okay. So now the reason why goodwill is going to increase. Have any of y'all have an idea why goodwill is going to increase? The reason is quite simple. Look at this format. When you look at this format, you will know. When your tax adjustment is when you do a tax adjustment, it is going to be in a negative figure, right? Negative figure means it's going to reduce your net assets. It's going to reduce your net assets. And now come here. Here it is. I told you there's a negative relationship between goodwill, right? When goodwill increases, net assets will reduce. When net assets increase, goodwill will reduce. In this adjustment, when the net asset is going to reduce, your goodwill is going to increase. So since goodwill is an asset, I am debiting it. That's the logic behind it. Because of this 15,000, my net asset is going to reduce. Since it's reducing, I'm going to have a positive impact on my goodwill of 15,000. That's why I went and debited goodwill. Right? Simple. Okay, hopefully I got it. Hopefully all of y'all are active. Hopefully all of y'all are active. I mean, have a cup of coffee or have a cup of water right next to y'all. We're almost nearing the end, right? We're almost done. We're almost there. So hopefully, within another about 30 minutes, I'll be able to complete 14 marks. Right? Okay. So we are done here. Okay. Let's move on to the question again. The group's finance controller, okay, fine, which is either you or me. I told you, put yourselves into the shoes of the finance controller. Has accurately completed the consolidated financial position and consolidated statement of profit. This means that this doesn't have any errors. This is free from error, right? Because it's accurate, it's complete, and it's verified by the finance controller, right? But the consolidated statement of cash flows is in draft. That means they have not adjusted the statement of cash flows. What the examiner is silent is that he wants us to finalize this cash flow, which is in draft. Okay, so that's what we are doing. The finance controller has not yet considered the impact. Here it is, has not considered the impact of acquisition of Trudeau's Co and consolidated statement of cash flow. What does he mean? You know why this is in draft? You know why the cash flows are in draft? Because they have not gone and done this adjustment, this goodwill adjustment or whatever. We acquired 80% of this company, no? We acquired 80% of the company, no? That adjustment they have not gone and included into our consolidated cash flows. So that is why it's in draft. So we need to find out the actual figures. We need to, we need to make accounts 100% complete. That's our duty. Okay. So fine. This is just a normal thing. This is just a normal thing. Until here we are done. Hopefully all of y'all have understood until here, right? Hopefully all of y'all understood until here. Okay. 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 This was adjusted. This 30% I have gone and done it in a goodwill. Workings fine. Okay. 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 What I will say is let me keep this for the last, because I need to give you all a very good understanding, a detailed explanation of this. So let me keep this for the last. Right? Let me keep this for the last. Because I know until now you all are able to do, guys. I'm pretty much sure that people who have done FR, people who are coming from different academic backgrounds, you all are able to do until here. Until this part, you all are able to do. No problem. This is 100% clear. You all are able to do because you all have the basic knowledge. But this is totally new for you all. This is totally new. So I will give you all a detailed explanation of this. Right? So for now, let me exclude this and move on. Right? Let me exclude this and move on. Don't worry, I'll be teaching this in the latter part. I'll be teaching this. Don't worry, I'm not going to leave anything unturned. I'm going to teach you all. Okay. Goodwill of Trudeau's Co was impaired during the year. Okay, fine. There's an impairment. Okay. This what does it indicate? Okay. Your brain should automatically indicate IAS 36. right? IAS 36 is impairment. Yeah, if you all have not studied, go and read IAS 36. Very important, guys. It's very important in terms of SBR standard, frequently tested by the examiner. IAS 36, right? Goodwill needs to be impaired during the year. Okay, fine. Okay. Have they given us any numbers? Now, see, they have for this and all, they have given numbers, right? 385, 600, uh, 747, 600. They have filled us with numbers, 100,000, $8, $13. They have given us numbers. But here, they have not given us how much is the dollar value of impairment. So, what examiner is silent is that he wants us to go and find out what is the impairment figure. He wants us to go and find out what is the impairment figure, right? So it's simple. He's hinting us this is an incomplete records. He wants us to go and complete the records. Okay, fine. You want me to find it? Okay, fine. We will go and find the impairment per year. Can be done. Also, he mentions there were no other goodwill impairments within the group. Yeah. So what does he say? Only the impairment has been arised only for Trudeau's Co. Apart from that, there was no any other impairments. Okay. Now another question might be coming up. I mean, with you all. Now, how do I go and find out this impairment? How do I do this incomplete records? Well, it's quite simple, guys. I mean, can you all see here? Right under the draft extract, they have given you all some additional information. I know it was me who told y'all to only refer to exhibit one, right? I know it was only me who told y'all to only refer to exhibit one. But there are some additional information also which they might have given, right? These additional information will be used for exhibit one, exhibit two. So, just go through, just try to read. Just try to read their name as well, right? Try to read them as well. Can you see here, guys? They have given opening balance 31st December 2004 and closing balance 31st December 2005. I will give an indication. I will give you all indication. What they're trying to do is by giving us the opening balances and the closing balances, they want us to find out the difference. The difference is called impairment. The difference is called impairment. Yeah. Can you all see here? The goodwill at the date opening date was 441 100, and this has increased to 447 400. This has increased. Why do you all think this has increased, guys? I mean, normally some account can increase if we have purchased something, it will increase. If we have got any gains, it will increase. If we had got any profits, it will increase. If it has got any upward adjustment, it will increase. In terms of goodwill, can you all remember? Can you all remember in terms of goodwill? I bought a company, Trudeau's Co. I bought a company, Trudeau's Co. Because I bought this Trudeau's Co, I had to calculate goodwill at the date of acquisition, right? Because of Trudeau's Co, I had to calculate goodwill at the date of acquisition, which is as per IFRS. IFRS, yeah, it's as per IFRS, either 3 or 10. I'm not sure of the exact standard. Just you all could go and read through, right? It's either it has to be IFRS 3 business combination or IFRS 10, right? So I need to calculate goodwill, right? So at the date of acquisition, how much was my goodwill after doing all these adjustments, after incorporating all these calculated amounts? I will get a goodwill. Goodwill is calculated simply total consideration minus net assets of the subsidiary at the date of acquisition, right? This 782 600, guys, add all this up, you all will get the net asset final balance. Add all this up, you all will get the total consideration. The difference between these two values is known as goodwill, 37,400, right? Now, you all would have initially thought, why is he going and calculating goodwill? Well, here, this is why I'm going to calculate goodwill. I need to find out impairment, right? I need to find out impairment. That is why I went through all the hassle of doing this lengthy equation or lengthy format I had to go and do. Right? So normally, guys, you all can do incomplete records in terms of tabular method. right? As well as you can do in terms of T accounts. Now, T accounts will take you a long time because T accounts will take a long time and we are not babies, right? So let us use the tabular method, which is used by finance professionals, right? Which is used by finance professionals. Okay. So this is goodwill working number two, goodwill. Working number two, goodwill. I need to find out goodwill. Fine, I'm going to find out goodwill. How much was the balance brought forward in goodwill? So the opening balance was 441,100. 441,100. Okay, fine. It is 441,100. Okay. After that, I acquired, right? I bought a subsidiary of True Doco, right? And because of that, I got a goodwill of 37,400. I got a goodwill of 37,400. Now this 37,400 will increase my goodwill balance. So this will be added. This will be added. So let me put a plus also. Let me put a plus also. This will be added, right? This will be added. I had an opening balance because of acquiring Trudoku. I had an addition in goodwill of 37,400. Now, what is the closing balance? 447,900 is your, sorry, 447,400 is your closing balance. My bad. 447,400. So the difference between these two opening balances and the closing balance is called impairment, guys. It is called impairment. So this plus this is 478. From that, I minus closing balance. I will get 31,100, guys. 31,100 is my impairment, right? This is how I did the incomplete records. So goodwill at the reporting date would be goodwill at the reporting date would be 6,300. Well, this was not needed at all, right? This is not needed. We are not adjusting SOFP, so this is not needed at all. We only need this. Why we need it? Okay, why do we need it? You all know impairment is a non-cash expense, right? Impairment is a non-cash expense. When I'm doing P&L, profit or loss, group profit or loss, I would have gone and deducted my expense, right? Because impairment is considered as an expense, so I would have gone and deducted my expense. When I'm deducting my expense, my profit would have reduced, right? But all of y'all know P&L. P&L is created in accrual basis, right? It is created in accrual basis. But our question wants us to find out the cash flows. Cash flows are on cash basis. So on cash basis, you do not need to take. On cash basis, you only take cash items, not non-cash items, right? I only need to take cash items and I do not need to take non-cash items. Okay. Why am I telling this? Why am I telling this? IAS 7. Why am I telling this? Because now this impairment, which is a non-cash item, needs to be removed because it needs to be removed to calculate the cash flows, right? It needs to be removed. So can you see here? Can you see here? Profit before taxation is given, right? Depreciation, which was a non-cash expense, would have been deducted from the profit before taxation. So that needs to be added back. That is why this is in a plus form. That is why this is in a plus form. Because this would have been deducted from here. Now I am adding it back. So the impact is 0. Right? So the impact is 0. So I added depreciation. Fine. Now, have they gone and written impairment? See, I told you, right? This is draft. This is incomplete. You need to go and indicate impairment. Right? You need to go and indicate impairment. How much was the impairment? How much was the impairment? I need to go and indicate impairment. Now see, you all will be having a problem between pluses and minuses. Now see, what I mean is impairment would have been deducted from this, right? For the people who know accounts, impairment would have been deducted to find out the profit before tax, right? Okay. If I need to remove off the impairment, which is already in a minus, I need to go and plus it back. So plus. How much do I need to go and plus? How much was it? 31,100 equals plus. Always try to link up your workings, guys. Don't try to go and type because uh sorry. Always don't try to go and link. I mean, try to link up your workings. Don't try to go and type because sometimes you all might have some typing errors. Okay, I went and added it. Okay, we are done with impairment as well. I went and plus it. Can you see here this plus? This plus indicates I'm going to remove off the. I'm going to remove off it. So plus and minus become zero, right? And can you see here? Can you all see here? Can you all see here? Can you all see here? I have gone and put one names. Well, these are the adjustments, guys. These are the adjustments that I put for my own, very own reference because sometimes we are doing multiple adjustments for 40 marks. All of us can forget. So that is why, as I read the question initially, I went and put. I mean, this I did it yesterday for the previous batch. I went and wrote this down so that when I look at this, I know which entries that I need to post. Yeah, which entries that I need to post. Okay, so we are done with you. Okay, we are done with you. Okay, moving on back to the last. We're almost nearing. We're almost nearing. So after this, after all the workings are done, I need to teach you all this, and after it, I need to post the entries. So we are almost done. Okay, the depreciation charge for the group or for the year ended was 625,060. When you look at the when you look at this, there is nothing to do, guys. Can you see here? I mentioned nothing to do. The reason is this 625,060, which was a non-cash item. This was a non-cash item. All right, let me write it here. This was a non-cash item. Non-cash. This was already adjusted. It would have been initially in your profit before tax, it would have been a minus. So I went and, I mean, not me, the examiner already has plus it and kept. So we don't need to do anything. If so, you all can have a doubt. Why has he given it? Wait. I'm coming to it. I'm coming to it. Can you see here? There were no disposals of non-current assets by the group during the year. Okay. That means, I mean, they have bought, I mean, there were no disposals, right? They never sold off any of the assets. They never sold off any of the assets. Although, read this, although, can you see here? This examiner uses these kind of words, although, however, or that, but, all these, although there were some additions paid by cash. Additions means they have gone and purchased some additions, guys. They have gone and purchased some additional assets. So what examiner needs us to do is we need to find out how much is this purchases. Again, you all will be needing to use your incomplete recording, right? You all will be needing to use your incomplete recording. Here it is. He has given us the opening PPE and the closing PPE. You all clearly can understand the opening was 3125 and the closing is 3668. You all can see that this has increased. Obviously. Why it increased? Why did it increase? Why did it increase? Here it is. It has increased because there were some additions. There's a good justification. Okay. So now I need to go and find out how much was the increase in PPE. So I'll do a working also. I'll do a working for that as well. Okay. Let me do a working for that as well. Let me remove all these figures. I have removed all these figures. Okay. How much was the opening balance? 3125,300. 3125,300. How much was the closing balance? The closing balance 366,8,900. 366,8,900. This was my closing balance, guys. Okay. Give me a minute. Hopefully my recording is, yeah, my recording is on. It's blinking, right? Yeah, it's on. Okay. Okay. Give me a minute. Hopefully my recording is, yeah, my recording is on. It's blinking, right? Yeah, it's on. Okay. Okay. Now, now here it is. Can you all remember, guys? Whenever y'all, I told y'all at the initial part, whenever you are acquiring an asset, or whenever you're acquiring a subsidiary, the subsidiary does not come only with its shares. It comes with different types of assets: PPE, inventory, trade receivables, cash and cash equivalents, right? So this PPE, because of the acquisition, this has been generated. This PPE, this PPE, because of the acquisition, I have been able to get this on free basis. This is on free, right? So when I'm going to get this fellow because of acquisition on free basis, I need to incorporate this as well into my PP workings. How much is it? 421,000. Let me again double check. 421,000. Yeah. Okay. Why am I including this 421,000 into my PPEs? Because I went and bought Tudor's Co. When I bought Tudor's Co had a PPE, right? I paid him some cash during the acquisition for his share of share of capital. Because of that, I got 421,000 free of charge, nearly free. So that free asset needs to be added into our PPE adjustment, right? Why we are adjusting is now after I bought that company's assets, those assets are simply mine. Those are not yours. I'm not going to give ownership to y'all. I'm not going to give it to Truders. No, it's totally mine. So that is why I bought it into my books of 421,000, right? The examiners told disposal during the year was zero. Hopefully, you all recall yourselves. Disposal, no disposal, so zero, right? He gave us a depreciation figure 625060. I told you there is nothing to do, right? There is nothing to do, but you all need it for your to identify how much was the additional purchases that has been acquired, right? So depreciation is 625060. 625060. 625060. 625060. That was my depreciation. And hopefully I'll remember, we did a fairward upward adjustment, right? We did a fairward upward adjustment, right? Here it is. We did a fairward upward adjustment, right? When we did a fairward upward adjustment, obviously the carrying value increased. Whose carrying value increased? Whose carrying value increased? Plants. PPE. Plant is PPE. Plants PPE increased. So that means this 50,000 increase was a debit to the plant. So that debit also needs to be brought into your calculation. How much is the debit? How much is debit? 50,000 needs to be bought into your calculation, right? We are almost done. We're almost done. I bought that also in my calculation. Okay, fine. Okay. Closing value was 3668,900. 3668,900. Now the difference between all these, can you all see here the differences I'm putting in a blue box? That blue box is the difference. That difference is known as additional purchase. That difference is known as additional purchase. Hopefully you all are with me. It's 8:20 p.m. Hopefully you all are maybe almost nearing completion. Give me about 15 minutes, 20 minutes. I'm almost done and we can end this session, right? So the difference between this, the blue box, simply you need to find out the blue box. The blue box is called as additional purchases, right? How you can find is the difference between all this and the closing balance is known as additional purchase, right? So let me calculate this one plus I'm buying subsidiaries assets plus I had, sorry, minus I had to pay depreciation plus there was a fairward upward adjustment, right? So as of now, my asset value was is supposed to be supposed to be my asset value is supposed to be 2,971,240, but they are indicating how much are they indicating? They are indicating my asset value is 366,890. So the difference between these two are my additional asset purchase value. So I have spent 697,660. I have spent 697,660. Right? I have spent 697,660. I have spent 697,660. All right. So that needs to be gone and recorded. Now, can you see here? Cash. Now, okay. That's what I need to tell you. Now, when you all are acquiring an asset, I'm sorry, when you all are acquiring a PP, guys, that acquisition is called as investing activities. All right. And since it's an outflow means you all are losing out cash. Since you're losing out cash, you all will be needing to reduce that from your investing activities. Okay. So fine, the accountant has used it. He has gone and properly classified it. IAS 1 properly he has gone and classified it, but he has gone and classified the wrong amount. He has gone and included 543,600. It ideally should have been 697,600. But the fellows have gone and mentioned 543,600. Well, it's simply an error. It's simply an error. Even though he knew the accounting treatment, he has gone and given the wrong figure. He has gone and given the wrong figure. He has gone and given the wrong figure. So what I need to do is, what I need to do is, what I need to do is, I need to first remove this fellow off. I need to remove this fellow off. Well, there are people who have different mathematical operations that you all could use to find out, but I'm using this quite simplest way that all of us understand, right? So if this was already minus, I need to plus it back to cancel it off. 543, 600. 543, 600, right? I add him back, right? I add him back. So plus and minus become 0. And here, I am giving the actual value. I am giving the actual value. How much was it? 697, 660. Can you see? Since it is an outflow, I am bringing a minus. Can you see? Since it is an outflow, I'm bringing a minus. What I did, this figure was wrong. Junior accountants were wrong. They have gone and they have classified it properly, but they have done it wrong. So I went and added back. Let me bring the plus figure also so that you all are aware. I went and added it back. So plus and minus became 0. And after that, I showed the actual figure 697, 660. Right? We are done with that. So we are done with PP as well. Right? We are done with PP as well. We are done with PP as well. Okay. Why have they given this? Why have they given this? Why have they given this? This, I mean, examiner is not mad, right? He doesn't give us normal, I mean, he doesn't give us information just per se of just giving the information. Obviously, there's a hidden information. We need to go and find it. We need to go and find it. We need to go and find it. Hopefully, I'll remember. I told you all he has gone and written the P&L balance here, right? We don't know how much the actual taxation expense that was paid. So we need to find out. If we need to find out, we need to know. If we need to find out, we need to know how much was the taxation amount paid. For that only we need to incorporate this. For that only we need these workings. We need this proof. Okay. We need this proof. So let me again move back. Let me again move back. Yes, this is not needed for, let me remove it. Because let me remove this. Yeah. Okay. Let me remove this also. I know, I mean, I should have, I mean, beforehand itself, I should have deleted all this. I know it was my mistake. So hopefully I'll hopefully I'll forgive me. By next session, I will make sure that you all have a new fresh spreadsheet, right? Okay, how much was the balance? How much was the balance of tax? here can you see there was a deferred tax as well as a current tax. So you all know you all can include both together, right? So it's 250,000, 250,000 of deferred tax liability as well as 256,900 of 256,900, right? So the opening tax liability was 506,900, which comprises of deferred tax liability as well as the current tax liability. Okay. The closing balance was 130,000 of DTL plus 364,300, 364,300, right? So the closing balance is, as per examiner, is 494. All right. Let me, is 494. Okay. Okay. 494, 300. Okay. How much was the P&L amount? You all know, when we book P&L, guys, let me draw it and show. When we book P&L expense into the P&L, or when we are transferring P&L, right? When we are transferring P&L, it is supposed to be, right, debit P&L expense, right? When you all debit the P&L, you all are supposed to credit the tax liability, right? How much am I crediting? 385,600. 385,600. Double entry would be debit P&L, credit tax liability. This is basics, guys. This is basics. Hopefully, your basics are strong. How much is the this one? 385,600. 385,600. Since this is on the credit side, it's going to increase your tax liability. Since this is on the credit side, it's going to increase tax liability. And hopefully I'll remember we had an upward adjustment, right? Because of that upward adjustment, we had an increase in tax. That increase in tax, we went and booked it as, here it is, debit goodwill, credit DTL. Hopefully I'll remember. So this increase in deferred tax liability also will come and increase into your workings. How much is the increase? How much was the increase? Supposed to be, how much was the increase? Where am I? Supposed to be 15,000, right? So 15,000 would have been your DTL upward adjustment increase in your taxation. So that will also increase your tax. If that increases your tax, guys, the difference between all these is your cash paid. Cash paid will always reduce your taxation. That is cash account credit, taxation debit, right? So let me put that also, cash paid, uh, debit, 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 debit tax liability and credit cash, right? This is what's happening. This will reduce your liability, tax liability. So you all need to find out. See, 506 plus the increase in upward adjustment plus the P&L. How much it is supposed to be? 907, 500 it is supposed to be. But your working shows 497, 494, 300. That means the difference between these two is the cash paid. 413,200 is the cash paid, guys. 413,200 is the cash paid. So that means I remove this off, and the actual figure is supposed to be minus 413,200. Okay, I'm putting all the workings in red color so that it indicates the actual workings, right? It indicates actual. Right, so we are done with this as well. We are done with this entire thing, right? We are done with this entire thing. Okay, we adjusted these people, we adjusted him, he's also fine. And we adjusted him. We forgot to adjust. I mean, we did not forget, we have not yet calculated. consideration paid for acquisition of true dose. You all know that when you all are acquiring true dose, you all are not going to acquire it on free, right? You all are not going to acquire it on free. You all need to pay cash, right? You all need to pay cash. Can you all remember? You all paid cash of 400,000, right? For that 80,000 number of shares. So you all can ask me, Abdullah, here, see, you paid 400,000 of cash. Can't you directly go and include that into your investing activities as an outflow? Well, the answer is you all can't. If you all have not acquired an asset, no problem. You all can go and include. Can you all see here? I told you all. Can you all see here? I told you all. I told you all. When I am buying, when I am buying, when I bought the subsidiary Trudeau Co, I got assets in terms of PPE, inventory, trade receivables, as well as I got cash also from him. How much did I get cash? 24,900. So our IS 7 principles say that we need to take the net amount. We need to take the net amount. I guess I would have included in the summary sheet. Okay. Guys, if y'all are free, sorry, if y'all are free, try to read the summary sheet as well. This includes all the summary that is related. Right? Here it is. When you acquire an asset, right? Sorry, when you acquire a subsidiary, right? You pay cash, right? However, there is a tendency for subsidiary to bring in cash or cash equivalents, right? Because now the cash, I mean, the subsidiary is bringing us 24,900 cash. If so, we need to take the net impact. We need to take the net impact, right? Because see, there is an outflow. I totally agree with y'all because I paid for the subsidiary. I paid for the subsidiary 400,000. There was an outflow, right? 400,000. Uh, I paid 400,000. Yes, totally fine. I paid him 400,000. So minus 400,000. But listen, I'm getting an inflow from him, right? He's giving me some cash. How much is he bringing cash into the business? 24,900. He's bringing cash into the business 24,900. So the final impact of outflow should be 375,100. The final impact of outflow should be 375,100. Always remember that y'all are supposed to take the net impact. Always y'all are supposed to take the net impact of cash outflows, right? Y'all are supposed to take the net impact of cash outflows. So the net impact is 375,100. If you all click this, you all be able to find out. Here it is. He's bringing in 24,900. We paid 400,000. So actually, how much did we pay? We have paid actually 375,100 was the amount that we actually paid, right? So we are done with that as well. We are done with that as well. It's 8:34. We are done with this as well. Hopefully, until now, you all have understood. Hopefully, until now, you all have understood. If you all have any doubts, guys, in terms of my explanation, in terms of my way of presenting, you all can feel free to drop it on the comment section, and I will, I will try to alter my way of teaching according to that, because I have to cater according to your requirement. Because I'm not going to do the exam; it's you all who are going to do your exam. So, if you all want detailed explanation, let me know. You all need detailed explanation. If you all want the practical knowledge apart from the, I mean, because now, see, we are learning finance, right? It's me in terms of myself. I don't want to learn SBR only, right? I need to learn the entire finance. I need to learn entire finance. So I would want some different experience. So if you need that, also let me know. I could do some shorts and upload that as well. But totally up to you all. Can you all remember here? Can you all remember I told I will teach this in the letter. I will teach this in the letter. That is what I'm going to do. That is what I'm going to do. Okay. The statement of cash flows figures. This is your last workings, guys. This is your last working. After we are done for the day, the statement of cash flows for the movement. in inventories, trade receivables, trade payables, and plant and equipment have been calculated by considering simply the difference in the year-end balances. 31st December 2004 and 31st December 2005. What they have told us is, guys, now see, what they have told us is, you all know the working capital adjustment, right? In IAS 7, here it is. This is the working capital adjustment. This working capital adjustment was calculated simply by taking the difference between opening and the closing. Simply by taking the difference between opening and closing. I mean, yes, that's totally fine. That's totally fine. But for anyone did this strike? For anyone did this strike? For anyone did this strike? When I bought the subsidiary bought the following assets into our business. He bought us current assets such as inventory, trade payables, as well as he bought us trade receivables. Did any one of you all think what will happen to these three fellows? Did any one of you all think what will happen to these fellows? That is what this paragraph includes. This paragraph says. See, they have not taken the adjustment of subsidiary. No adjustment of current assets done. You'll understand. He has just taken his opening balance before the subsidiary acquisition and closing balance after the subsidiary acquisition, and he has found the difference. That difference was only included here. That difference only was included here. So this is ideally wrong, right? Because subsidiary is also playing a role. He's also bringing some current assets. So that needs to be that needs to be bought into the calculation. So for that, I will give you all two ways of remembering it, right? I will give you all two ways of remembering it. You all can choose any way that you all want, right? You all can choose any way that you all want. You all can choose any way that you all want. You all can choose any way that you all want. One is the logical approach, right? It contains, pluses, minuses, mathematics, accounting into it. Or if you all want to memorize it, no problem. Totally up to you all. If you all are a memorizing person, you all can use this. If you all are, if you all need to get an understanding of how it works, you all can use this. Okay, let me explain. First, the memorizing pattern, and after that, the logical pattern as well. So memorizing pattern, you all see that they have not given us in this one they have given us PPE, goodwill, deferred tax, current tax liability, but they did not give us inventories differences, right? Opening, closing, increase. How did that increase in inventories form? How did the increase in trade payables form? They have not given us those, right? So we merely have to start our calculations from here, right? So the mantra says is that when you're acquiring a subsidiary, I've bolded it. I've bolded it. When you're acquiring a subsidiary, right? And when you're acquiring the subsidiary, and when the balances are increasing, here see, increase in inventories, increase in trade payables, increase in trade receivables. When they are increasing, right, you will have a negative impact. You will have a negative impact, which means the overall movement will be needed to be reduced. It will decrease the overall movement. Simply, when these people increase, these people will reduce. If it's an acquisition, again, I'm telling you, if these people increase, guys, right, during an acquisition, if there's an increase in debtors, inventory, payables, the overall impact of the acquisition should reduce the movement. Opposite happens when you all are decreasing in debt, right? If this was decrease in inventory, decrease in trade payables, decrease in trade receivables, then this one will be this will be reducing. This will be reducing. Meanwhile, this person will be increasing. It's an inverse relationship. Okay, they share an inverse relationship. They share an inverse relationship. Okay. I don't know why my pen is it's shaking a lot. I don't know why. I'll have to fix my laptop. So when this fellow reduces, this fellow increases. Okay. So that's what I've mentioned, increase in positive moment. And the other one is when you're disposing a subsidiary. Now in this question, this is not relevant at all. They have not disposed any subsidiary. They have only acquired. But I'm giving this for additional information. When you're disposing the subsidiary, right? When you're disposing a subsidiary, in case if it increases, if there's an increase in inventory, increase in trade payables, or increase in trade receivables, there is a positive impact, right? Both these have, let me mention this also, there is a inverse inverse relationship, right? However, here he has a positive relationship. That means, guys, this is like brother and sisters, right? They never get along. They are poles apart. They're always opposite. This is like both the brothers. You and your younger brother, right? They have the same mindset. They're always positive. If if there's an increase in debts, inventories, and payables, there will be a positive impact. Positive impact means the movement will increase, right? However, if there's a decrease in debts or inventory or payables, there will be a negative impact, which leads to a decrease in movement, right? This is the mantra, right? Now, when most of you look into this, you all might be thinking, am I mad? Is Abdullah mad just to explain something by just giving us a mantra? And there is no proof of how this was formed. There is no proof of how this was formed. Because so people who want to memorize, this is a good approach. If you all want to memorize and pass off SBR, right? But I would not recommend this approach because if you all don't know the groundwork, if you all don't know how that particular formula, how that particular relationship was formed, you all would not be able to make conclusions, right? So you all need to learn the logical approach. You all need to learn the logical approach, right? Uh, so try this. Normally, normally, right? Normally, how do you find out the movement in FR? When you are studied in FR, when there was you all were required to find out the movement between the opening balances and the closing balance of the current asset as per IAS 7. When you all were required to calculate the opening balances as well as the closing balances according to IAS 7, right? How did you all find the movement? How did you all find the change? It was always the closing balances minus the opening balances, right? That was done in FR. That was done in FR. But now we are at FR. We are grown now. We are moving into SBR. We are moving into SBR. How it happens, this guys, when you are acquiring, right? Here it is. When you are acquiring, when you acquiring, right? When you are acquiring an asset, I told you when there's an increase in movement in debtors, inventory, payables, right? I was the one who told you when you're increasing in movement, right? Your overall movement will decrease. Now I'm going to prove it. Now I'm going to prove it. How am I going to prove it? Here, see. Normally, normally, let me do this for you so that you all also understand. Let me do this for you. Normally, how do you all think this? There was an increase in movement. You all would have found out the closing minus opening, right? Whenever the closing minus opening was when the closing assets were more greater than the opening assets, then there was an increase in movement, right? Here it is, this one, increase in movement, right? But now after acquisition, this is before, right? Okay, this is before. This is before, and this is after acquisition. After you all acquire, You all need to understand your closing balances. Now see this was bought. Here it is. This was bought on 30th June 2005, right? So from here to here, this asset will be included in your closing balances. But have you all thought this was not included in 1st Jan to 30th June, right? So then because of this, the closing asset will be double the amount of the opening balances because there was no increase indicated in the opening balance. Let me show it. Let me draw that and show you. Let me draw that and show you. Let me draw that and show you. This was a time scale. This was a time frame, right? This was 1st Jan 2005. This was the date of acquisition 30th June, right? And this was 31st, the closing reporting date, 31st December. What I'm meaning is this fellow, this person, 31st December 2005, now he includes, both the parent's assets as well as the subsidiaries assets, right? But this fellow, he only includes parents' assets. Due to this, due to this comes in comparability issues. I'm not able to have a proper comparison between the opening and the closing balances. I'm not able to have a proper comparison between opening and the closing balances. Can you all see? Can you all see here? Can you all see here? This fellow will have the closing balances. Again, I repeat, the closing balances will have an impact of parent as well as the subsidiary because we acquired him on 30th June. So the closing balances will have an impact, but the opening balances did not have an impact. So by doing this, I will have a very bad comparability issue. I will not be able to compare two balances. Why? One fellow has something favorable and the other fellow does not have that favorable component. So I need to make those two equal. I need to make those two equal. That is what I'm going to do here. That is what I'm going to do here. So after acquisition, how it was, right? It would have been closing assets minus opening, right? This was what happened, right? Now I'm going to make it so that both people have the impact of subsidiary. Now I'm going to make it so that both people have the impact of subsidiary. How I'm going to do is closing minus, open the brackets. Closing minus, I'm opening in the bracket. Opening parent assets plus, I'm going to add for the opening. I am going to add for the opening balance of the parent. I'm going to add subsidiary acquired assets too, right? By doing this, by doing this, can you all see, if you all know maths, this minus over here, this minus and this plus, minus into plus will give you all minus, right? So therefore, it would be closing minus opening minus minus subsidiary acquired. This is why when the movement increases, when the movement increases in terms of debts, inventory, payables, you will be needing to reduce. Can you see here? Can you see here? Can you see here? This because of the subsidiary, your movement is going to reduce. The opening balances are going to reduce, right? So because of this, your movement will decrease in movement after acquisition, right? This is how I'm going to prove what I told you all through written formula. This is how I'm going to prove you all how it worked. This is how I proved you all. This is how I proved you all how it works. Earlier it was closing minus opening, right? Again, I'm repeating myself. Earlier it was closing minus opening. The closing balances had the subsidiaries impact, but the opening did not. So I had a comparability problem. So to avoid that comparative problem, I went and added subsidiary because when I'm acquiring subsidiary, obviously the assets need to be added back to the opening. So what I did was I made an equation. The equation is closing minus, I opened the brackets, opening, I indicated a plus here. Why? Because I'm purchasing subsidiaries assets. We are not done there. So then after this minus into plus will become a minus. That is why we have derived a new equation, closing minus opening minus subsidiary acquired. Right? Due to that, we have got a decrease in movement. Due to that, we have got a minus subsidiary, sorry, minus subsidiary movement. Now you all go and read this. Now you all read the mantra, you all be able to understand. Now you all read the mantra, you all be understand. I would advise you all personally is that you all try this at home. You all try this at home so that you all also understood it, right? And when you all are watching this part, personally, when you all are watching this part, specifically, do not increase the speed to 2. Do not increase the speed to 2. Do not increase the speed to 2. You all need to understand this properly. Okay. So do not increase the speed to 2. Try to watch it in the normal mode. But for the rest, obviously, no problem. You all can increase it to 2. I don't have no issues. You all increasing it to 2 speed. But this, try to watch it at a normal speed so that you all understand. You all have a proper comprehensive understanding, right? This is it. This is it. Yes, see. When there's an increase in data moment, when there was an increase in data moment due to the acquisition, due to the acquisition, there will be a negative or decrease in the movement, a negative decrease in the movement. Here it is, a negative decrease in the movement, a negative decrease in the movement. I have told the wordings as well. I have gone and explained, and the explanation I have indicated through arrow marks as well. If I don't understand, I will share all the Excel. And despite that, see now this is totally new, right? Some people will get it for the very first time. Some people will not. Some people will not. So if you all don't get it, let me know. Drop it on the comment section as well. I will upload a short. I will upload a short as well for that. There is no issues. All of us are here to learn, right? Okay. Now let us come to the final adjustments. Now we are going to calculate the actual values, right? So profit before tax, there were no any adjustments. There were no any adjustments. So I'm going to put a sum between this and I'm going to sum. Depreciation, there was nothing as well. Copy paste, right? Impairment, there was an addition. So I added the actual to 0. Okay, fine. Now we need to do these people. We need to do this. As I told you, when there is an increase in inventory, the final movement should be decreasing, right? Here it is. When there is an increase in inventory receivables, the final movement should be decreasing, right? This was what I told you. When there is an increase in inventory debtors or payables, there should be a final decrease in movement. This was what I told you all. So therefore, If this minus figure, needs to reduce, how will I reduce him? How will I reduce him? I will have to plus him. If this minus figure is in minus, how do I need to decrease the fellow? How do I need to decrease the fellow? I need to plus him back. In terms of trade payables, he is a plus figure. I need to reduce him. How will I reduce him back? I will show a minus figure. This will show the decreased impact, right? This is the decreased impact. This will show you the decreased impact. Okay, now you all need to know what values are going to show. What are the values that are going to show? Well, here their values are. Inventories 256,800. Inventory is going to be 256,800. Meanwhile, trade receivables 223,300. 223,300. Payables 175,400. 175,400. This is it, guys. This is it. This is it. When there were increases, I will highlight that also. Bold, bold again, as well as a final bolding. When there were increases in these figures, the overall movement needed a reduction. The overall movement needed a negative reduction. Therefore, I had to reduce it. How will I reduce? When this was a minus, if I need to reduce, I have to plus him back. If this was a minus, if I need to reduce, I needed to minus him also back. This fellow was personally a positive figure. So therefore, if I need to reduce him, I need to minus him off with the individual figures that were given by the examiner. Yeah, so that is it. That is all it. That is all it. It is all right. And after just simply additions and subtractions to make sure that your answers are totally correct. All right. And after here, okay, okay, okay. Yeah. Now, now see, I'm not an expert in FR. Even I'm not an expert in SBR. I'm also learning, right? I've completed my exams, but I'm also still learning, right? So y'all cannot just blindly believe on me. Y'all cannot just believe on me what I say. Y'all also need to go and check the answer scheme, because there might be some points that which I have not given to y'all might be given by the examiner. So y'all need to go look at that as well. Say, I guess it has to be, sorry. No, it has to be 200. No, 160, 170. It has to be something. The reason why I'm telling you all to go and look at the examiner's report as well is you all will be knowing how is this 14 marks derived. You all will be knowing how is this 14 marks derived. Can you see here? The net cash, the net cash adjustment will give you 1 mark. The taxation paid adjustment will give you 3 marks, right? 3 marks is, I guess, for the working, you show 2 mark, and 1 mark is for the adjustment. Or the 1 mark, you go and show the adjustment. Cash paid acquired to PPE is 3 marks. That's also working 2 mark and 1 mark for the implication on the this one, on the pre-populated sheet. Working capital adjustments, 3 marks. I guess 1 mark for each, right? And calculation and adjustments of goodwill. He has a significant amount. He is getting 7 marks. This is how the examiner allocates your marks. This is how the examiner allocates your marks. So always, after what I would like to say is sorry, always after you do a certain question, right? Try to self-correct it. How will your self-correctors go and look into the marking scheme? Go and look into the marking scheme of how these are allocated. Because some of us feel that we do not need to show off the workings. Some of us feel that we do not need to show the workings. Can you all see here? Can you all see here? Only just posting by posting that into the pre-populated sheet, you're only going to get 1 mark. But by showing them the workings, you're going to get either 7 or either 3. It's a full grab. It's a full grab. So always have an intention of trying to grabbing the full, right? And uh, and also I need to check, right? I need to check whether my workings are correct. 1087,060. Did that come to my answer? 1087,060. Fine. Right. And after that, 1072,760. 1072,760. I guess this has to be 1072,760, right? Yeah. Okay. So that means, guys, I have done detailed. I mean, I know this had dragged about. It took about 2 hours, right? I know I have done 100% detailed explanation. But if you all have not understood, right, feel free to drop a comment on your comment section, as well as I will be sharing my WhatsApp number, or I will be sharing my email address, right? I'll be sharing you both. So whatever the convenience you all feel, you all can contact me and clear your doubts. I will try to clear it off by 48 hours, because since I'm doing my MBA as well, I need to focus on that too. And I'm working as well, so I have to focus on that as well. But apart from that, give me 48 hours. If I don't respond, I'll make sure that one of my colleagues at least respond to your query. Yeah. So that means that there is a two-way discussion between me and yourself. So hopefully you all understood this question of Kabelo Co. Hopefully you all understood this question of Kabelo Co. Uh, and also we have adjustment number 2 and section number B to be done, which is 16 marks. I will be uploading that video tomorrow or either the day before, the day after, whenever I'm free, right? Also, what I would recommend is, I told you all 3 recommendations, right? Go and look into the examiner's marking scheme, try to do a lot of past papers, as well as try to read off examiner report. Here it is. Examiner, after your this one, he gives you all an examiner's report. You see, examiner's comments. He will tell you all. He will tell you all, he will show you all the shortcuts that is needed. So follow that. I'm 100% sure you all be able to pass 50 marks, because sheer commitment, sheer dedication, and hard work and resilience, all of these are going to bring you all those marks that is needed to pass off SBR. And you all have different sources on YouTube. If you all are self-studying, you all are having wonderful lecturers, because I studied personally under two different wonderful lecturers, Tasvita Gupta, Mustafa Mirchiwala. All of them, they taught me a lot. So hopefully that you all are able to grab all this from YouTube or their personal classes and ace your exams. So, anyways, hopefully you all have a very good evening. Good night. Stay safe. And let us hopefully meet in the next video. And let me know if you all need to discuss any other questions that you all are stuck in. I will drop videos or slides or shorts in regards to that. If that is so, have a good night and thanks a lot for attending. See you.